Hello, everyone. Welcome back to Reimagine 2021 version 10. So this is our 10th edition anniversary. We've been doing virtual conference events for the past year now, bringing the latest founders, the latest innovation, and also up-to-date news in the space. I'm very excited to bring you a new guest here today. So with me here today, I have Sam Kim, who's the partner at Umbrella Network. Sam, welcome to the Reimagined show. And I think it would be great, just to get started, if you could tell us a little bit about yourself and, how you got into the crypto space.
Yeah, thanks, Roshan. I'm excited to be here. Love what you guys are doing with this show, and especially during these kind of tough times for getting in touch with getting the message out with the community. So really excited to be here. And yeah, happy to talk about kind of how I got into this space. So I've been an entrepreneur for most of my career, primarily in the digital advertising space. Um, Starting in 2011, I've started a company called that's now called Gimbal, which is a mobile advertising firm that specializes in location-based attribution. In 2017, I started my second company in the same digital advertising space. The company is called Lucidity, and it uses the blockchain for analytics in the digital advertising space. So if you look at digital advertising, when you run a campaign, it sometimes seems simple to the layman, but really it involves around 10 to 15 vendors, and each of them tracking their own data. And so this, there's always huge discrepancies. You always expect about 20% discrepancy rates between various reporting parties. And so we thought this was a great opportunity to use the blockchain, right? To use a smart contract via a shared ledger to collect all the data from the various participants and identify which impressions or events were valid and which ones the advertiser should pay for. And the challenge we had at Lucidity is that blockchain at the time, operated incredibly slow, right? It was 2017, 2018, Ethereum was really just getting off the ground, and we're starting to build, and there wasn't very much infrastructure in the industry yet. Like, we have a lot more today, but still in 2017, we had almost none. And so we had the challenge of how do we scale this application to handle digital advertising scale, which is anywhere from 500,000 to 1 million transactions per second. When you think about it today, we're nowhere near even those levels in Ethereum or any other blockchain for that matter. And so we came up with this idea of using a Merkle tree to aggregate those signals and to roll it up, which basically is like a side chain that sits on top of Ethereum. And we were incredibly excited because it is able to scale. And today it powers the advertising for a lot of big brands and agencies. Lucidity has partnerships with companies as large as Group M, which is the largest digital advertising agency in the world. Brands such as Toyota and Hyundai Genesis, the Yum brands like KFC. So major brands using this blockchain application for the analytics of their advertising campaigns. So that's how we got started. And it's been an incredible journey, and I've loved every minute of it.
Yeah, that's awesome to hear. And, we're seeing more institutions, more media players like get into blockchain and crypto. It's always exciting when they're, actually using the on-chain products. And that's why I'm excited to speak to you here today so that more people can understand, what you guys are building with Umbrella Network. Can you kind of explain to us, like, what's the importance of the Umbrella Network and how it's different than some of the other oracles that are currently out there?
Yeah. So before I answer that, if you think about an oracle, right? An oracle's job is to make data available for blockchain applications, right? Because blockchain applications can't access off-chain data directly. And so how do you do that while ensuring security? Because smart contracts are open source. And if you can manipulate the data that runs those smart contracts, that powers those smart contracts, you can exploit and take advantage of it, right? And so as oracles, we're charged with the task of not only getting that data on chain, making it available on chain, but also making sure it's done in a very safe and secure manner. And that's where a lot of us are different, right? That's, we think the Oracle market is going to be a massive market. It's a hugely important market, almost as important as the blockchain itself. And, I think this is not one of those winner take all markets. Not any Oracle is going to be able to address every single need of every blockchain developer in the world. It's just too broad, too diverse, and there's just too many different use cases. And so, we're taking it on from the angle of how do we get more data available? How do we make sure that even the low value data, such as the price of a number 1200 ranked project on CoinGecko, how do we make sure that that data is properly supported? Until now, I mean, we've been, if you look at the industry leader, they have about 400 pairs of data available, crypto price data available. And that's led to, that's supporting somewhere in the order of around $55 billion in TVL today. I mean, that's unbelievable, right? We've come so far in such an incredibly short period of time. But where we're different, as we're saying, is that, the middle of the market, the longer tail of the market, data that's not as frequently used also needs that support. And we do that by using a lot of the same architecture that we use at Lucidity, which is, basically a battle-tested technology that's been out there for 4 or 5 years now that we've been running. And that allows us to get the data available in a really low-cost manner. Actually, there's no incremental cost for us to get data available on chain. And so that's where we're different. So if we look at it today, we just kind of launched on our mainnet recently, and we're already at 1,200 data pairs available for blockchain developers. And we're striving for 10,000 by the end of the year. And our only real limitation is really understanding what data that the developers out there need. So, I mean, that's sort of our difference is we're able to handle lower value data, make it available to blockchain developers in a manner that's just as secure as what's available by other oracles.
Yeah, that's awesome to hear because there's different types of oracles, different like governance structures. So the other thing that kind of stuck out to me is how much you guys rely on community. So can you talk a little bit about like who can run a node and how easy is it to get involved in your community?
Yeah, so Roshan, I imagine like you're like me and so many of us out there where we got into this because we believe in the power of decentralization, right? And not when we say decentralization, not in the hands of a handful, but really the broader community. That's why I first got into Bitcoin, and that's what got me even more excited about Ethereum. And so I really believe in that. And I think it's really important that we use that to secure the data that we bring available on chain. And so what we do is a couple of things. One, we're aiming to be a DAO through a delegated proof of stake system, and that's a bit of a process. But second, what I'm really excited about is we've started onboarding community members to run validator nodes in our network. Basically meaning not just professional outfits who have deep pockets and strong relationships with us, but also members who have been sitting in our Telegram who have much smaller pockets, but really are passionate about what we do and how we do it, giving them the opportunity to participate in providing that data. And the key to that is not only do we just let individuals and community members participate, but we have an economic layer on top of it to ensure that security. And so, we use a proof of stake system where each validator puts tokens at stake in each consensus round. And if they are part of the part of the majority, they're properly rewarded. However, if they vote with the minority, then they're slashed. So it's that ability to get the community on, but to enforce it, to really enforce the security mechanism through that proof of stake. So yeah, it's basically the DAO where to summarize it, like it's one, the DAO where we're making sure that the governance of the network overall is through a community vote. But second, also just putting the power of the network into the very hands of the people who support us and back us.
Definitely, it's one of the pillars of the entire crypto industry, just the people, the stakeholders, and I guess in this case we're talking about node validators who are supporting the network. It was really great to hear. Kind of going just even outside the crypto network, how do you think this will affect other things like traditional finance markets? Do you think that over time people will just rely on the oracles more than like a Bloomberg terminal or something like that, where all the data is really centralized?
Yeah, I mean that's an interesting question. I mean, I hope we go in that direction, right? And I obviously, I'm assuming that you'd like to see the market move in that direction, just like I would. And I think we're like in the early stages of this. The Bloomberg terminal obviously is massively powerful and important. I mean, it's powers the global financial markets in many ways, right? It provides that data. And I think we're going to get there where we start today with 400 pieces of data. I mean, it seems like we're not even in the first inning yet, right? We're just getting started. And we're going to get there. We'll be, like I said, we'll be at 10,000 by the end of this year. But right now, we just don't have enough data available to compete with those centralized sources, right? I think once we start to get more asset data prices, more functionality built into these data feeds, whether it's through the ability to script kind of calculated values into the Oracle feeds, there's a long ways to go, right? There's data visualization, there's news feeds. There's a lot more that needs to be made available for us to be competitive, but I think we're just getting started, and I can't wait. Like it's going to be exciting when we are on equal footing with those guys.
Yeah, that makes sense to me. Like these traditional players, they've their entire business model is like, in this case, for example, just the selling of data or selling access to it. So like in the crypto world, it's a bit different. I would say the data is really all out there in some cases, like the blockchain and different things like that, and we compete on kind of different metrics. But I know what the umbrella network, you're kind of working on some different products, some different solutions. So can you tell me like some of the, I guess, more trading maybe solutions, like you're adding more pairs, but also know you're adding things like, I don't think it's futures, but something similar to that.
Yeah, I mean, but to go back for 1 second, if you think about like pre-Bloomberg, getting data for traders it wasn't a simple task, right? So and if you think about it, pre-Bloomberg terminals weren't that long ago, and so back then data costs were incredibly high, and it was through that aggregation of like a Bloomberg terminal that made it so readily available and allowed for the explosion of traders all around the world, right? Whether it's massive global hedge funds or individual traders at home. So, I think we can get there pretty quickly. But getting back to your question, yeah, we're really excited about some of the things that we're developing beyond just the data sources data that we're bringing on chain. If you think about last year, there was a lot of excitement around the options markets, right? And the options market in the centralized world it's a massive market. It's huge, right? It's trillions of dollars. And crypto and DeFi has that opportunity available to it, but we haven't realized it yet. And we feel that a lot of that is a data problem. It's a lack of data. It's a lack of data in terms of what's called implied volatility, which is sort of one of the key variables used in calculating option prices. There's also a lack of the ability to calculate proper Greeks, which are kind of the derivatives within the options. And then there isn't a proper market to hedge it, like a futures market to hedge those Greeks. And so we're working on solving some of those problems. Some of them we are doing it in-house, where we are where our Wall Street quants are calculating implied volatility. They're creating like a three-dimensional surface around implied volatility across different strike prices and different maturities. But at the same time, we're also working with others who are going to help develop, like say, a futures market. We also believe that there is going to be a growing need for swaps And I think that's another market that we want to be an active role participant in. We want to be able to provide the interest rate curves that power those swaps. And so we think that as we get more data, and not just asset price data, but some of the other, calculated values, some of the ones that actually where you're putting a lot of more thought and calculations into it, and some data science and machine learning behind it. I think that's going to power the next wave of DeFi application and growth and explosion. So we're really excited about that. We're actively doing research and working with partners on in those areas.
Yeah, I mean, it might make the world a better place if like the Fed had like an oracle for a lot of the things they're tracking, and everyone is always checking those charts. Sometimes they even take down those prices, right? Like the M2 or whatever. They're like not showing it or anymore. So it's totally crazy. And one of the things I wanted to also ask you is like when we're talking about like different blockchains and technologies, are you sort of just interoperable with all different types of blockchains, or like what kind of chains are you compatible or building on right now?
Yeah, I mean, Roshan, do you believe in like a multi-chain future?
Definitely. I don't think one chain can support all these billions of people on Earth.
Exactly. Similarly, that I mean, that's how we view it too, right? We don't think any one oracle can support every use case. We don't think any one chain can support every use case as well. Like I think there'll be a little more specialization. I think Ethereum will always be near and dear to my heart, but I do believe that a lot of these chains will be viable, and so we designed it as such, right? We certainly started with Ethereum. We next branched into Binance Smart Chain. It's an EVM compatible chain, and so that was a natural extension. BSC also allowed us to open up our network to the community just because of its lower operating costs. Whereas with Ethereum, the high gas cost and the high price of ETH still makes it a little bit difficult for individuals, despite our very low cost structure. And I think with that's going to get better. We're seeing the transaction fees coming down in Ethereum. With ETH2, I think it's going to be really exciting to see that come down even further. But we are going to support not just other chains like Solana, Cardano. We're also going to support layer twos like Polygon, Arbitrum, and Optimism. And so, yeah, we believe in a multi-chain world. I think we are absolutely gonna support all those networks, and we're gonna do it methodically, one chain at a time, and make sure that the data that we bring on chain onto those blockchains are as secure as they are today on Ethereum.
Yeah, definitely. I was just reading. Yeah, you guys are, I guess some of the partnerships you guys have formed. You guys are helping BSC Binance Chain with some things. Like kind of going beyond that, do you think in the future there'll be like institutional players that will partner with Oracle providers, or do you think these companies will, just like they want to custody their own Bitcoin or buy Bitcoin themselves? They'll take that route. Like, do they actually have the knowledge to create something like an Oracle, or do you need like crypto centric knowledge to create a successful one?
Yeah. So one thing I've learned over the years and working in kind of the digital advertising world with big global agencies, I mean, they're never in a rush, right? They don't jump into things blindly and move as fast. That's what we do, right? That's what we startups are there for. We're there to break things and experiment. And I'm sure you've seen this throughout your career. Like that, that's the purpose we serve. And I love it, right? Like I can't imagine doing anything else. But those institutions move really slowly. But if it makes economic sense, they will do it. It just won't always be at the time and at the pace that we would like them to move, because that's just not the way you steer a ship as large as theirs. But yeah, absolutely. I mean, I think it's the advantage of running smart contracts and making sure you have proper data. Like it makes too much sense, and it's too complicated and too difficult for them necessarily build their own in-house Oracle for each and every situation. Like if you look at, for example, with MakerDAO, just how much stress it put on them, what a big process it was for them to create their own internal Oracle. Now imagine if, Nestle or Unilever has to do that. That they're going to rely on experienced DeFi crypto projects like Umbrella to power that for them. And what's exciting is that we already have those relationships, right? These are relationships that we've harnessed over our careers, and so we're actively engaging and speaking with them about using the Oracle for much of their future developments. But it's not something that's right around the corner, but it is going to happen, and we're really excited about that.
Yeah, definitely. I think that makes sense. You kind of, although oracles are definitely not, I would say, unique to crypto, because a lot of things we're talking about right now are like even yeah, exactly what you guys are doing. You guys are bridging like off-chain data and bringing it on chain, like
Yeah.
for real world assets. So how do you think that's going to impact I guess some of the competitive advantages in these, I would say, traditional markets where, again, the people that control the data, you can do things like front running, which we also have in our industry. But I feel like when you use something like an Oracle, you're kind of democratizing the data a bit.
Yeah,
So
absolutely.
what are some of the metrics like that you think will be important for either the future market, just in crypto in general, or how we value, like, I don't know, future commodities and stuff like that?
Yeah, I mean, if you look at what we were doing at Lucidity, what we do at Lucidity is basically serves as an oracle of sort for the digital advertising space, right? And by having this shared ledger that basically reconciles the data and creates a single source of truth, we're able to identify a huge amount of waste, right? And that is an application of an oracle outside of kind of the financial markets, right? When we think of oracles, we tend to think a little bit exclusively about DeFi, but that was an application where looking at it outside of kind of the financial markets. And so we think there's going to be many more markets beyond digital advertising and DeFi, and we'll be looking at those down the road. But as we were talking about the financial markets and the asset prices, like how do we, when do we think that we'll see a little bit more maturity, and what's the role that the oracles are going to play? I think we'll start to see kind of the spread come down, right? Right now, if you look at the spread of borrowing versus lending is quite high, and that's largely because the participants need to be compensated for that risk that they're taking, and some of that risk is that there's uncertainty around the data, right? If you need to foreclose on an asset on collateral, how certain are you about the market, the price that you're giving that value, the value you're giving that collateral, and the value that you can collect when you liquidate it, right? That's as an example. If you look at some of the spreads in other markets within crypto, whether it's synthetics, or if you look at how it compares in pricing relative to the centralized counterpart. If you look at the price of an option on one of the decentralized options platform like Inhegic, and you compare it with what's on Deribit, there's a huge discrepancy, right? We need to get that compressed. And those are all functions of getting better data, more data, and lively data. And so I think those are some of the things that we need to be looking at to see, like, how are we doing a good enough job? Are we providing enough data? Are we getting enough scale into these markets? And so those are things that I look at, and we've already seen some of that kind of compress in some areas, and I think it's going to be coming a lot more. So I mean, those are the things that I look for.
Yeah, all metrics that are definitely unique to our industry compared to traditional finance, where they're actually controlling like the data even through the underground cables, so to speak, right? They actually can control
Actually, yeah,
it.
I was talking about that with somebody. I believe it's from the Graph, where just the amount of money they were spending to reduce the time from getting data from the options pits in Chicago to Wall Street, and they were building these lasers. I mean that. I mean that's how important getting lively data and data, in a promptly is. It's worth not millions but billions, and because these are $1 trillion markets. So yeah, you're absolutely right about that.
Yeah, I just find it interesting how uh, their innovation, so to speak, is like making these fiber optic cables faster or building more cables that they own. But you never hear about these things in our industry. Of course, we use the same internet, and like even what you were talking about with the graph and different things like that, indexers, we don't really exhibit control in the same way. But I think, one clarifying question I had related to synthetic assets was, it's a question for me myself as well. Like when you have something like gold and then they create like a synthetic asset, and then let's say we put it on Oracle, we're tracking the price of that. How is that different than, I guess, taking maybe a centralized place where everybody in the traditional world is looking at the price of gold and actually tracking it that way rather than minting a synthetic asset? Because all different types of protocols have like different synthetic assets. So is that going to be kind of a problem going forward? Like, how do I know which one to trust, I guess?
I think that kind of talks to the larger challenge or question that we have, right? And I think you're absolutely right. Like, how do we know what each protocol is doing with those asset prices and how they're using it to make to value their collateral or their contracts? But the larger problem to that is like, where is the risk in our system, right? That I think that's where some of this is going. We have these, DeFi is relatively new. We have assets locked up in many different areas, whether it's based on the value of a synthetic asset or the LP token in Uniswap, right? We're locking these things up. But ultimately, what is the risk that sits into these contracts? Like if there is a shock in the market, and we're unwinding these positions, like what does that mean for the market? Like, are we all liquidating on Uniswap at the same time, the same asset, because the price of gold just dropped dramatically? Like, honestly, that's something I mean, you're maybe the first person that's asked me that question, which is fantastic, but it's something that we've thought about. And to be honest, we don't know. I don't know what that trickle down effect is if gold falls, 30%. What happens in all of these synthetic markets? And I think we need to have a better grasp of that soon. Otherwise, because the amount of money that's getting locked into these contracts are growing, and we should know, we should be able to anticipate where the risk lies in such an event.
Yeah, I mean, hey, we don't know the answers to all the questions. It's just a important and great question to even explore, right? Like as we're creating these new class of assets. I mean, we have them in the traditional world as well, but it was never the case where like, you and me, so to speak, can like mint these synthetic assets, and um,
Yeah.
it's very liquid, right? I would say you can quickly like leverage a lot of these assets as well. And I know that's another thing people have been talking about even as we speak right now, about leverage.
Yeah, I mean, look, you were, saw the aftermath of the financial crisis in 2008, right? I mean, professional financial institutions, some of the largest and most the well-run, best-run outfits, uh, got too deep into the mortgage markets, and they didn't understand where their risk lies, right? They were doing things like CDOs and then CDOs squared, right? And so we're talking, people criticize us for what we're doing in
Yeah,
DeFi.
exactly. I was hoping you brought that up actually.
Yeah, I mean, do you remember? Obviously they've gotten their hands around it a little bit better now. This time around during the pandemic, you can see that they managed that situation a little bit better. But still, 2008, these guys who are supposed to be the most educated, most well-run, the best risk management outfits in the world had no idea where their risk lied. Um, and so, yeah, I think we are early, we're going to grow, and there's going to be some pain along the way. But I think, I believe that by us having this decentralized, right? I mean, in terms of where the ownership of these contracts lie, where the money's locked up, it's not with just 5 bulge bracket banks and 10 hedge funds. It's more broadly distributed, and I think we're better positioned and better equipped to handle it because I really believe that more sharing it broadly, both the gains and the losses, is a better way to do it than putting it into the hands of a handful of super powerful, incredibly well connected institutions. It's that because that they're not going down, right? I mean, they made sure that the Fed bailed them out, but the Fed doesn't always bail us out, right? And so I believe in more of that decentralized approach, more democratic approach or democratized approach than what we did in 2008 with the financial crisis.
Yeah, no, those are great points. And again, I think for those of you watching, I would like rewatch this segment right here because it's just a great comparison of what they were doing before, like kind of like tokenizing mortgage-backed securities, and that market was even bigger. So it was just crazy. So I hope we don't do the same thing in crypto. I think the good part is we started, of course, with things like collateralization and stuff like that. So even if you take on leverage, it's like everything is kind of guaranteed on chain, and in that sense, like there's no arbitration. There's no, you can't go to court if you don't pay your loan back. You just
Yeah.
the network takes your collateral. So
Like the
I
way you
really love
put
that
that,
part.
tokenizing mortgages. I mean, that is right. You're right. They tokenized every asset you could think of, including the biggest one of them all, mortgages. And you're right. Like everybody's treated fairly, right? Everybody's treated equally. Whether you are somebody with a whale with a big book or somebody like me with much smaller assets locked up. So, and I think that's important, right? Like, why should, isn't that the way the world's supposed to work? Like, why should the bulge bracket banks get treated differently than me? Like, we're all in this together. We should all be treated equally. So, I think you're totally right about that, and that's a super valid point.
Yeah, definitely. It's all, and that's what I really love about our industry too. Inclusivity, all the stuff we're talking about today, like running nodes, it all kind of ties back to community members. But also, I think one group of, I'll say like maybe not stakeholders, maybe not the right word, but developers. I feel like they don't get appreciated enough. They're not talked about enough. So let's talk about that a little bit. Like, what are some of the interesting applications you've seen developers build on your platform? Or like, what are some of the applications that you'd like developers to be incentivized to build?
Yeah, that's absolutely. I mean, like that's why I'm here in Paris today. I mean, we just finished a hackathon working with developers, and some of the most interesting stuff, honestly. And I think perhaps it was just a coincidence, but we did release some options data, and there were a couple of folks working on that side. And it's the options is it's not a problem that you're going to solve in one weekend over a hackathon, but there was a lot of progress made in exploring different types of option pricing and using things as simple as a Black-Scholes model to kind of an arbitrage-free pricing model. And so to me, as somebody who followed that market for a long time, like I'm really excited about that and the developments there. Different ways to do asset swapping was another one that we're starting to see people experiment with. And then not just the traditional AMM. I probably shouldn't elaborate too much further on that, but that was another one that I saw. But beyond that, the traditional use cases of basically lending platforms, but lending against beyond the top crypto assets, not just the top, crypto assets like ETH, BTC, but looking at kind of the mid and long tail, allowing people to access funds using those assets as collateral and they're able to do that with us because we are supporting those token prices in addition to the top feed. So that's some of the areas that we're seeing some development and we're really excited about. And yeah, I can't wait. I mean, also, of course, kind of cross-chain. We're starting to see some of the cross-chain swaps and cross-chain lending that we're able to support. So we're seeing a lot more development there, and we're excited.
Yeah, definitely. And one of my last questions is, I guess I want to kind of go back to leverage because I think people are really scared about this and maybe
Yeah.
there's a misunderstanding about it in the space. So, what would you tell people that are like kind of maybe don't understand how leverage works in the crypto market as far as either locking up your funds, taking a loan against it, or even providing liquidity to a pool because it's so different than any of the opportunities you traditionally get. But can you sort of explain like what are the real risks you think, and what are some of the maybe risks that you don't think are that dangerous?
Yeah, I mean, look, there's the obvious risk of having the market move against you and your assets being collateralized, right? Nobody wants their collateral to be liquidated. That's first and foremost. But beyond that, I think people need to think about when anytime you lock up your assets into a contract, you know, how long has that contract been out there? How certain are you that it's that it's secure? Because just because it's audited does not always mean it's 100% secure. We've seen things like flash loan attacks where a, a hacker will manipulate the price of an asset on the source of data that's determining the value of your collateral in those contracts and taking it to their advantage. And sure, that's been going on for about a year now, and that's starting to become recognized, and people are developing around with that in mind. But now they're starting to also attack like the liquidity LP tokens, and that's kind of a more recent innovation and by these hackers. So who knows what they discover next, right? And so the way to mitigate it against that is, locking up into well-established contracts or diversifying, right? Diversification is often the best way to minimize and reduce your risk because there's a lot of great yield out there and you do want to take advantage of it, but you also want to do it while protecting yourself on the downside. So yeah, I mean, honestly, it's really those kind of the two big ones are having the market move against you and getting liquidated, or two, getting attacked by some sort of exploit.
No, that's actually a very great specific piece of advice. The only thing I can add is like don't trust, just verify. Like exactly what Sam said. You can actually check out the longevity, the history of these transactions. That's the great part about it. You can
Yeah, and
actually
don't
check
be
and verify.
afraid to jump into their Telegram group and ask them like, what's your data source, right? Like, where are you guys getting how are you evaluating the asset? And if they tell you that they're pulling it from a single, DEX or centralized exchange, then, that's not, you should be wary. They should be pulling that data from a secure Oracle, whether it's Umbrella Network or one of our fellow Oracles out there. Like that's what they should be doing because that's the security that we provide.
Yeah, hey, I really hope that's going to be actually a foundational pillar where that's like the standard, right? Everything's pulled with oracles. And yeah, to end things off, like tell us about how members can get involved in your community and even connect with you.
Yeah, so we're very active on Telegram and on Twitter. We've always log everything into our Medium post, and so you can always follow us there. We're always, like I said, we are a community-run Oracle, and so whether you're a developer or technical or not, you're always welcome to participate. We run votes anytime a major decision is made, and we'll be making those far more frequently going forward. And if you are a member of the umbrella community, you can delegate your tokens to a validator who will participate in governance for you. So those would be kind of the main ways for the non-technical folks. We also have ambassador programs for the non-technical folks to help us get the word out about Umbrella Network. And then for the technical folks, there's obviously the opportunity to develop on the Umbrella network using our data feeds. And then second, to run a validator node for us. Right now, it is it does require some technical skills to be a validator, but we're working we're working very quickly to reduce that learning curve and make it available for non-technical folks. But today, it is primarily for technical folks to run a validator node with us. And so come join us, help us. We're always looking for feedback. And then finally, like if you're a developer of a blockchain application, reach out to us. Let me know like what data feeds do you need that we don't have, because we'll make it available for you in the next sprint. I mean, that's how quickly we move on those requests. It's the number one thing we do is get data available to the developers out there. So come join us, follow us on Twitter, join our Telegram group, read us about us on Medium, and yeah, tweet at us. We'll always respond. And if you have any questions, feel free to reach out to me directly.
Awesome. I really love a lot of the values that we talked about here today. And yeah, thank you so much for being here, part of Reimagine, and bringing up all these important points.
Thanks, Roshan. It was a real pleasure to be here with you. Look forward to speaking again.
For sure. And for the rest of you that are here, please stay tuned in. We're bringing you more interviews, more latest news, cutting edge news with all of the latest founders in the space. And we've done over 500 plus interviews now. So check out our YouTube page. And other than that, enjoy the rest of the show. Thank you.
Thank you.